talk about the golden runway today, which is the part of a gold discovery, the value that's created in a gold discovery, the part that's most reliable as an investment. To describe that, let's take a step back first and explain what happens to a gold discovery. So if a company makes a gold discovery, then that asset, that discovery, that project goes through what we in the industry call the Lassonde curve, named after a famous guy, Pierre Lassonde, in the gold mining space. Pierre did a really nice job of just capturing the value changes that happen as a discovery goes through discovery, the excitement, the potential, and then it goes down into sort of the reality. So here's the Lassonde curve. You see a real increase in value right off the bat, and that's the discovery, that's the excitement. Investors pile on board, the sky's the limit, and the share price can really, really rocket. The part that I need to add to that really exciting description is that doesn't happen very often. I mean, the odds of really significant discovery success are, people say 1 in 100. I think they're probably more like 1 in 500 for the junior explorers that are out there trying to make a discovery. So if it happens, the share price ascent is dramatic, super exciting, wonderful for investors, but it's pretty rare. Once that discovery happens, a bunch of drilling, figure out how much gold is in the ground, start to see if it would make sense to mine, and then you get to the downturn in value. Why does it become less valuable as it becomes better understood? Because understanding it, figuring out how to build a mine on it, permitting building a mine on it, engineering, financing building a mine, those things take a lot of time and a lot of money, and that is boring for the market. So the value of that discovery actually declines significantly and reliably as it goes from sort of speculation through the stages of reality. The part that I'm most excited about is what I call, what a few of us in the industry call, the golden runway, which is this second ascent on the Lassonde curve. Why does the price rise again? Because after the drudgery of going through all that engineering and permitting, it's time to actually build a mine. It's time to take the value that's been defined in the ground and start pulling it out of the ground. It still costs a lot of money to build a mine, but as you go from breaking ground to producing gold, you go as a company from spending lots of money to making money by producing gold, which, as we know, is worth a lot per ounce these days. That's the golden runway, and the reason that it's so reliable is because most companies, once they get a project to construction decision, they've put so much time and energy and study into that project that 92% of those that reach a construction decision reach production. It happens. Really reliable odds, and the returns that you get on that second ascent are phenomenal. The golden runway is from construction decision through to when the mine starts producing metal, gold. And usually, just to set the scene, that takes about 568 days. I'm getting that number from a study done by a friend of mine, Lobo Tigre. He publishes his research under The Independent Speculator. Really great source of information. He looked back and did a great study. Since the 1980s, there were 124 stocks that didn't have a mine at the time, reached a construction decision for a project that they had, and then went ahead and tried to build that project. And there's a few key conclusions from that study. The first conclusion is that 95% of those projects where they started building the mine, they succeeded building the mine. That is a really exciting reliability when you're looking at stock investing. The second key finding, and this is why we're talking about the golden runway, is that the average return for those 124 cases of stocks that went from deciding to build a mine to producing gold, the average return for those stocks was 111%. So, really strong return over a reasonable time frame with high reliability. So West Red Lake Gold is literally at the beginning of the golden runway. We're working on the Madsen Mine project. It's in Ontario. It sits on top of a really nice high-grade resource. And really importantly, a lot of the mine is already built. The mill's already there. The underground development is already there. The tailings facility is there. This thing is largely built. We are right now doing the additional projects that are needed so that we can push towards our goal of restarting gold production at the Madsen mine in 2025. Assuming we do that, then West Red Lake Gold is at the beginning of the golden runway, and it's actually an accelerated golden runway because our timeline to intended production is very short.